Hello, everyone. Welcome back to How to Trade. This is the 5-8-13 crossover strategy. My name's Shane Vernier. We're going to be going over that in just a second. I'm going to show you how to trade the 5-8-13. We're going to have a YouTube video coming out in the next several weeks on this strategy. I think it's a very good scalping strategy. But for right this minute, we've got to get out to breaking news. Right now, if you are in the markets, you've got to be very, very, very careful with what you're doing with your leverage and your exposure. Specifically in the gold market, I would watch the gold market and also your Forex pairs, anything that has to do with the U.S. dollar. Right now, Trump's having a press conference. He's calling it the names press conference. There's going to be some big announcements in this one. He's talking about reciprocal tariffs. That means there could be a fresh round of tariffs coming our way anytime. Those things have been shaking the markets up. And also he's going to talk about the beneficiary of a lot of the government fraud that's been uncovered over the past 2 weeks with the Doge Committee. They're going to name some names today. This is supposed to be a big deal. Be very, very careful if you're in fact in the market right now, because this is the type of thing with the new Trump administration when you could definitely be seeing some volatility come out of absolute nowhere. So I want to welcome everybody back to the room. I wanted to get to that right away. I think that that's probably the biggest thing that we're going to be dealing with during this live stream is going to be the news cycle. So if we see a big move and you don't know why, that's why. It's going to be all Trump and more tariff talk. Right here, if you want to trade, be sure you get out to Switch Markets. They've got 100% credit bonus on your $5,000 deposit. That'll get you up and running. Really trading anything that you want to trade. Your favorite markets: crude oil, gold, stock indices, crypto indices, or crypto CFDs. They've got it all for you. So be sure to get over there and check out Switch Markets. Right now, we just executed a 5-8-13 trade, and I want to sort of show this exactly what the dichotomy of this trade is, and then we're going to unpack the rules, how you can get in there and begin trading this on the time frames you need to be looking at, and also the times of day. Then we're also going to cover our big key news event today, and that was going to be PPI. Aside from the tariffs, they're going to announce the tariffs here anytime, and it's going to be absolutely probably fire. So good to see everybody back, too. Good to see you, Team Arena. Good to see you. Good afternoon, good evening, good morning, wherever you may be. This was going to be a sort of a fast and furious webcast. We're going to do the best we can to get you out in front on a few trades. This is one that just came across the board, and it's one that I really like. Now, this is a good look at the 5-8-13 4-hour chart. Okay, you got a nice big 4-hour chart here on the U.S. dollar Japanese yen. Now we're going to talk about the idea, or really the strategy that went in to this trade. But for me right here, it's relatively straightforward. We've got our short-term EMA. That's going to be our 5 EMA. It crossed over to our 8, which is going to be our center EMA, and that's our signal essentially to sell the markets. Now there is a couple qualifiers that we've added. The one qualifier is, okay, you've got to have price beneath all three. You've got to have price beneath all three of these moving averages to actually have a viable entry point. And you see that's where our sell came in. Now, I've also added RSI. We're going to talk about RSI relative strength here in just a second. And that's one that we were in overbought territory. We were up above 70, and then we were just looking to sell the market. So we were overbought. We're looking to sell. Bang. There's our sell signal. And now we're just going to go ahead and give this thing a go. See what we got. A 4-hour chart on Forex pairs is absolutely fantastic. Just be very careful about this tariffs meeting. Quick sneak preview. We've got a video dropping on the YouTube channel tomorrow, and it's going to show you how to do the 9 EMA strategy, that basic strategy, and augment it with Fibonacci retracements and improve your entry points. So I went over a few examples on that video. If you're always, if you're trading these crossover strategies, whether it's the 920 or maybe just the 9 EMA, which isn't really a crossover, but it's just a basic strategy, or if you're just trading something that's momentum based, you always feel like you get in the market and inevitably it goes against you. Inevitably. And what we tried to do with this latest video was I showed you my weapon of choice, which was the Fibonacci retracement sequence, and I'm showing you basically where you can target and how you can improve your entry points and sort of switch that risk versus reward in your favor. So just as a quick sneak preview, if you did have a 5-8-13 strategy here, we've got the sell going. Is that the best entry point, just to sell on this big negative bar's close? We've got the 5 crossing the 8. We've got price action beneath all 3. Is that the best area to sell it? It's going to get us in on all the breakouts. We're not going to miss a breakout doing that. But inevitably, it seems like every time we get into one of these trades, it's almost always the same story. It retraces. It retraces back up into here somewhere. So that's what I want to really highlight is, is it better to wait for a deep retracement, maybe into this initial range before taking this sell? Or do we just belly up to the bar and sell it for the, sort of instructional purposes today? I just went ahead and sold it. Ralph H., good to see you, Ralph. So other than that, I mean, that's really where we're at with the 5813. I'm going to go through a few of these trade ideas. We're also going to talk about some of the news of the day and things to look at. And I'm also I'm ready for extreme volatility anytime. If Trump announces big tariffs, anything really can happen. So right here, this is the gold. This is a trade idea that we did put out a bit earlier today. And it's an easy one. Sometimes technical analysis is very easy, and what I want to show you here is a couple of things. Number one, we put a video out a while ago that was the 920 EMA strategy, and what you can see right here is we just did a little basic coding, which is something I've been doing a lot of lately, basic coding. Bobby Bob, good to see you. And this is for the gold market. Now, this is a daily gold chart, and you can see if you ever watched that video, the coding that we did on ChatGPT, when we got our crossover, we wanted to color in that first bar gold. That's our buy signal, and when we get a cross under, when the 9 crosses under the 20, then we get a big purple candle, and that's going to be our sell. Well, take a good look at this. Right there's your bid, and since that bid that was on the 8th of January, and we've gone up about $500. So if you got that trade, great. If not, don't worry about it. We've got another trade coming your way in gold, and it's a sell. Now, the first question I would get is, say, Shane, it's such a bullish trend. Why do you want to sell? And I'm just like, well, it's not really that I want to sell. It's just that we have to understand really how important key levels are in the validity, or at least the magnitude of a level like 3,000 coming into play. So right here, I'm looking at 3,000. I believe the trade idea was for 94.50 sells or 94 sells. Your exact entry is going to probably vary according to your broker, but I would definitely be looking to go to the short right up in here somewhere. And the idea is real simple. We're going to get a test at 3,000 and then a short-term rejection before we either get established above 3,000 or we go much, much higher. So for me, that was a relatively easy layup trade. I wanted to put that one out there for you. Check that one out. That's going to be in your trade ideas, and also that's going to be beamed right to your inbox, your email inbox, if in fact you're already following me here inside the trading room. So definitely want to be aware of gold. Now, as far as what I think of gold, it's definitely bullish. There's no two ways about it. It's bullish today. You're up about 0.5%. We had a bit of a pullback yesterday, and now we're just sort of rocking and rolling north. I mean, if I was looking at something like this strategy, like the 5813 we're going to show you here in just a second, that strategy is going to be incredibly applicable here to gold, and we're going to want to execute those trades probably to the long side. And I'm going to show you some time frames and everything there to get that done. One Fibonacci retracement sequence that I want to go over today. And then we'll go ahead and talk a little bit of news, and then we're going to unpack 3 different 5813 trades. The first one that we're going to look at here today is going to be a daily chart here for U.S. oil. Now, U.S. oil really saw a major correction yesterday of almost 2.70%. We had an OPEC report that came out, and we went ahead and we got this bounce back. So if in fact you're trading WTI crude today, I was earlier, there's a couple of things that you need to understand. And the first one is that we are going over rollover right now. And rollover in the futures markets, especially as it pertains to WTI crude, is awfully tricky. Now, I had a few trades that came across today in crude oil, and I was fortunate. I ended up getting sort of committed to one and had to stick with it, and it took a big draw, but ended up getting paid off pretty well. But it was really risky. What I was doing there was really risky. I don't recommend taking big time risks with like a 190. With a 190 volume to a 158 volume. That means that if you're trading U.S. oil today, WTI crude, you've got to really be careful with these volume figures. 190,000 contracts traded to 158. That's a volume split. We call that rollover. Rollover can be very difficult to deal with because you've got a lot of different traders. Institutional traders are bringing these spreads in, but also the market's not as deep. I had problems getting filled at my prices today, and that was tough. So if you're trading U.S. oil, be very careful. However, here's a few levels that you could probably look at as you're rolling into the weekend trade. Tomorrow, I believe the volume split's going to be worse, so I don't think you trade WTI crude tomorrow either. But if you come back Monday or Tuesday, you'll see that full volume will be on the April contract, and you've got absolutely fantastic resistance right there at 71.54. So keep your eyes peeled. In your inbox, you're probably going to get a trade idea that's designed to sell WTI crude somewhere around 71.54. And if that doesn't work, it will work for a scalp, but somewhere up around 72.35. That's even better. And if you look right now, we're still tracking that back month contract, that March contract. Be careful if you're trading U.S. oil. It's going to get choppy here in the next 24 to 48 hours. Okay, guys, I got a few questions. I'm more than happy to answer. Let me see. Sirohi, I'm sorry, I'm very terrible with names, but hello, sir. I need this indicator's name. Yeah, I mean, this first one that we showed you here, this is just our 920 EMA crossover. And what I did was I went through and showed you guys how to code this on a YouTube video. So if you're watching us on YouTube, which I think you are, Shrikant, I'm sorry, that's a tough name for me to pronounce, but Shrikant, if you are watching us on YouTube right now, just go into my videos channel and take a look at that 920, how to code or how to use AI to code the 920 EMA strategy. You're going to want to check that out, and I show you exactly how to do that. And all it is the 920. You're looking at gold over for a buy signal, purple bar sell signal, and you'll notice the shade. The shade's very important. The bigger the shade, the distance between the 9 and the 20 EMA, that means the stronger the trend. All right, that's enough talk about that and U.S. oil. Let's get right out to price action here on our Japanese yen trade. So, if we're looking at trading Forex pairs, and a lot of you trade Forex pairs, and I get this question, read it, pretty much every day. Let's see. I got one more question. T. Marina, you can sell into resistance and then buy off of the support. Yeah, you want to sell resistance and buy support. And remember, if you sold resistance and price breaks above that resistance, it is now support. So you got to be be able to think on your feet when horizontal support and resistance levels don't really move. That's why a lot of folks prefer this moving average approach, because you can actually get a momentum, sort of a read on which way the direction of the market's going, and try to always align yourself with that. I sometimes will run into that trouble, but I look to scalp, and I can scalp retracement levels. I've been doing that a long, long time. And I have a pretty good feel for the market and what kind of market state we're in, and basically when to stay out or at least to stay away from trends. Really, that's how you lose trade in any sort of horizontal support and resistance. You just get eaten up by a trend. So that's the first thing that I always try to do, is make sure that I don't have a trend. I don't have the monster out there that's lurking after me. That's for sure. All right, we got a few other questions. Ralph, do you recommend back testing? And if so, how far back? Yeah, I mean, I'm actually working on some software that we're building out, and it's designed to help you take your strategies and build your own trading robots, and a portion of that is back testing. So for what I do personally, my approach to the market is intricate, meaning you can't really back test it. I mean, we could throw support and resistance levels and might draw Fibonacci's, but there's so many different variables. Like I would have to try to filter out, a viable swing high and a swing low, and then I would also have to look at different time frames, and I would also have to sort out key economic events and all that. And that's sort of what I personally look at my 13 years of experience. 14 now. It'll be 14 in March. I lean on that for my back testing, because my back testing is more regards of I know what I can do. Now, that's a discretionary approach to the markets, and I don't really recommend that to folks that are beginning. I think you need a structure. That's why the 5-8-13 gives you a structure. It gives you a structure, and it's real important to follow a structure in the market, or else you're just guessing. And some days you'll guess good, and some days you'll guess poorly, and at the end of the day, you're going to lose money. Almost guarantee it. So I think that if you're looking at a new strategy, like let's say you were going to use something like this, you're going to say, okay, I'm going to go ahead and back test this. Do it. Now, as far as how far back goes, most people recommend a year. I would say the state of AI, if you could filter 5 years easily, sure, you could use that and build yourself a nice big statistical database of results. Also, I think there's a lot to be said for the last 90 days, especially let's say you're doing 1 minute or 5 minute charts. 90 days is going to give you hundreds and hundreds of iterations of your trades. So, and that's a lot. I can tell you that beginning with the back testing projects that I ran when I was a kid, well, not really a kid, but 2011, we were looking for a statistical database of 10,000 trials. That's what our programmers told us, 10,000. And we all knew, we said, we're not ever going to find 10,000 of these things. So we had to make decisions. Is the most current data more valuable than data 5 years ago? I would say yes. But if you're going to back test a strategy, back test it across a bunch of different assets. That's not bad. That's not too bad. I think you could probably figure out, at least in that way, if you have something that performs well over 3 or 4 different assets, and maybe in a few different situations, like it performs well as a buy and a sell signal, then you'll know that strategy has what we call efficacy. And then we get into walk forward optimization and all that stuff. We'll talk about that another time. That gets very, very deep into the tall grass. That's for sure. Let me see. Nedrek, XRP, yee, get them, boys. All right, right on. Let me see. Nick Moe, how determining on which to use, the 920 or the 5813? I like them both. We're going to scalp with the 5813 right now. Nick, the 920 is probably more of a position trade type of a strategy, but you can certainly use it on those real short time frames. All right, let me see. Can follow up here. Can the 5813 be used on all time frames? Absolutely, and that's exactly what we're going to do. Let me see. Chukwu, what do you think about the Kiwi CAD on a buy? I'll tell you what, I'll look at the Kiwi CAD right at the end of the stream here in about another 15 minutes, and I'll run my numbers and give you my opinion on your trade. Kiwi CAD, don't let me forget, I might. Okay, guys, 5813, let's do it. This right here was our first trade. So we've already got our entry point, and I just talked about that sort of a little bit out of order, but just the basic conventional entry is going to be right on this bar close. Very simple entry rules. The 5 crosses over the 8. There's our 5. The 5 is going to be the red one. Our 8 is going to be the blue one, and our 13 is going to be the purple one. Now, when the 5 crosses over the 8, that's going to be your signal to enter the market. Now, here's the kicker. We've got 2 filters on this trade. The first filter is price has to be beneath all 3 moving averages. Now, it's got to be beneath all 3 moving averages because we're trying to get with the pressure, with the direction of price. That's why the 13 is so important. The 13 is my favorite EMA by far. That's the one I use with my Fibonacci's and my Bollinger Bands. No question about it. Now, if I was going to say take a trade that maybe didn't quite adhere to just a support and resistance, a horizontal support and resistance play, which could be counter trend, I would be looking at something like this. Now, the reason why is, and this is a 4-hour trade. This is going to be a swing trade, but I've got everything I need to build the trade. I've got my entry point. I've actually got a couple of options. I can wait for a pullback if I really want to. Something up in here. All right, we're not going to cover that today, but you could. That's the video we're putting out tomorrow. This right here, though, our basic entry. Okay, there's our sell. Great. That's our entry. What are the other 2 parts of the trade we need? We need a stop loss. Then we need a profit target. So for me, I look at the stop loss up there. I say, okay, where should my stop loss be? I love swing highs and swing lows. Now, that would be sort of really difficult to backtest. That's the problem I'm having right now, Ralph, is trying to get the AI software to recognize a viable swing high or swing low. So here's what I would say about what we're doing. That right there could easily be your initial stop loss, or it could be above this sort of upper extreme. I don't care which. Just be consistent. For me, I would probably put it right up above there just in case we get choppy up here and then see a big reversal. Now, as far as what would my profit target be, now, that's pretty much what everybody wants to know. To me, it's the least important part of the trade. I know where my entry is. I know where my stop loss is. I know exactly how much I've risked. So if we just sold, I don't know, something like 153.15s, our stop loss up there at 54.87, I know I'm on the hook for about 165 pips, something like that. So I've got to dial that risk down. I've got to keep that somewhere around. I recommend the 1 to 3% rule. Personally, I don't really have a problem if you're putting 5 to 7% on your trades, but just remember, if you are putting 7% on a trade, God, don't lose 2 or 3 times in a row. You got to make sure that you're winning these trades. Now, the real question is this trade worth it? And I would say that there's some good profit opportunity. Now, a lot of you are smart money traders. You believe in smart money concepts. That order block right down there is a viable profit target, no question about it. This bottom of market structure, right down here, this bottom of the bearish market structure, you could put that as your profit target and be just fine. So if we were interested in building this trade according to what the market's doing, I would say, all right, there's my stop right up there. There's my entry. Do I get at least a 1-to-1 on this? Now, I'm a big 1-to-1 trader. I say, listen, you've got to at least get what you're risking. Now, I have been ridiculed over and over and over again, and people have told me, Yadi, you'll never do it, you'll never do it, you'll never do it, you can't do it over the long run. And I go, that's complete nonsense. If you use a 1-to-1 risk versus reward, there's a couple things you need. Number one, you need a lot of trades. That's exactly what my systems are designed to do. This is a moving average trade. We've got to go to shorter time frames to get the number of trades we'll need. That's the first thing. The second thing is the math is easy on a 1-to-1. All I've got to do is win more than 50% of my trades. That is it. And if I'm hitting for 60, 70, or 80% success rate, all right, There's my edge. So let's do something really easy. Let's say we win 6 out of 10 of these. Okay, we're betting 7%, or let's use 5% of our profit, or excuse me, our trading account. We're wagering 5% on each trade. We hit 65% or 60% of our trades, 6 out of 10. That gives us a 10% edge. That means every dollar that we just risked, we have a 10% edge. That means 10 cents of that's ours. So then the goal becomes what? As soon as we have an edge, easy. Then we just trade as much money as we can. That's what fund managers do. That's why BlackRock is BlackRock and State Street, State Street. That's why Warren Buffett's Warren Buffett. They established an edge. They bet as much money as they could. That's it. That's the game. That's finance 101. Now, with a strategy like this, if you're going to do that, you need a lot of trades. Now, the other way to do it is to get in there and try to take these trades and take big moves. You can do that too. There's nothing wrong with that. So let's go ahead and go to this Euro USD 30-minute chart. Now, this is just a little bit different rendering of what we're going to talk about here, and this is the RSI, and that's an absolutely fantastic overlay for this strategy. So what do we have right here? Okay, we've got something cooking. We've got the 5. There's a 30-minute chart right there. We've got the break. So we would have the 5 got over that center, and then right there would have been your entry, something like this. What happens if we add RSI into this, the relative strength index? Now it's relatively straightforward what we do. If we're in overbought territory, when that RSI is over 70, we sell the market. We look to sell the market. And if we're in oversold territory beneath 30, we're looking to buy the market. So take a good look at what happened up here. Let me get my little highlighter going here. Take a look at what happened right in here. You had a nice swing high that developed. Right down in here, you were in overbought territory, so we were looking to sell. So according to our 5-8-13 rules, when would we sell? Right there. Right there, bang. You got the crossover. The 8 price was beneath all 3. Don't ever forget that. Price has to be above or below all 3. All 3. That's why our 13 period is so important. That's the baseline. That tells us the broader trend strength. We've got the 5 crossing over the 8, and then we've got price breaking over the 13. It's time to get with price action. Take a look at what happened here. So if we were going to build this trade, there was your sell. We would have been short right there. You can see we got that retracement. If, in fact, we stayed short, we made money. Now, a lot of traders like to try to limit their risk by doing this. They get out of this. They get out of this right when the 5 crosses back up over the 8. I don't do that. I don't do that. I believe in building the trades and then leaving them where they're at. This one right here, though, you can see with the 5 crossed the 13, but it didn't cross the 8, so you could have ridden this one out. Now, if you did that, you can see it was a relatively good trade. Your stop loss was to the top of the screen. Some were right up in there, and there was your break. Right there was your break, so that would have been your entry. And the real question is how do you want to manage the trade? Well, you could use market structure, which I highly recommend. Your profit target could have been right down in there somewhere, right at the bottom of this pullback. You could have done a risk versus reward that's static. The distance between this could have been a 1-to-1 or maybe a 1-to-2 or a 1-to-3. Could have done any of that. Or the last way that a lot of traders do it is they just wait for price to reverse and then they get out. If that was the case, then you would have seen the bullish break, the crossovers, and then right up in there would have been your out. So you probably would have wound up losing money on a pretty darn good move. I don't like that. I like leaving them and having everything built static as I go into the market. So, all right, let's apply some of these principles on real short time frames, and we're going to go ahead and use this chart with the RSI on there and see what we can do with something that's actually moving. All right, what do we want to do? Let's go ahead and look at gold. Gold's been absolutely static today. Let's go to a 5-minute chart and see if we have anything at all. And we don't. You'll notice our RSI, I sort of shaded it in down here to show you that we're right around that 50-yard line, that 50% level. That's not very good. We've got to be up here over 70 or down beneath 30 before we make a trade. Now, if in fact we wanted to not use RSI at all and say, okay, let's just go ahead and mute that out. We don't want to do that. We just want to trade the crossover itself. Then we would have just traded it. There was your 5-minute break. There's the 5 breaking over the 8, okay, over the 8. Price was located beneath all 3 moving averages down in here. And then you can see we got a little bit of bearish follow through and then a pullback. So I get this question a lot. Say, Shane, can you do it right now? Can you take the trade right now? I'd say, yeah. And that's what tomorrow's video is all about, is if in fact you didn't get much of a move down here, if it didn't hit a profit target or really move in a significant fashion, then you could definitely try to improve your entry points by maybe selling a Fibonacci level. You've got a nice, beautiful range here. You've got a better entry right there. So if we were going to do this, let's go ahead. We sort of missed our entry. So right here, this would be original entry. Let's wait a minute, see if we can get a better deal on this. See, when you pull back, you'll notice right there, that 5 is just linking up perfectly with that 38%. That's the short we want right there. That's a pretty good level. And what that does by entering here, as opposed to entering here, your stop loss is going to be the same. You got a better deal. And if you got a better deal, you can spin that risk versus reward in your favor. And then you can get in there and make some great trades. So right here, it doesn't look like it's going to come our way right now. Let's go market order, sell it. All right, let's go ahead and sell it and see where we're at. You can see right there, where did we get filled? That's why market orders are they're trouble. They're trouble. We didn't get filled right there. We should have had a limit order probably right there. But that's okay. Let's wait and see exactly what happens. Now, as far as my trade goes, as far as my trade execution goes, how or where can I really build this thing? Meaning, what should I be shooting for a profit target and a stop loss? I already know my stop loss. I already know it. It's right up here. Remember to shade that a few pips. Don't be a pork chop. Don't put your stop loss right on top of that spike high. You'll have less success because of why? We see a lot of failed auctions. We see a lot of stop hunting and then a reversal, liquidity sweep. You don't want that. So what I would recommend is just putting my stop loss right up here. If I'm in front of the screen, I'd be watching price as we get right towards that swing high, and that would sort of, if things don't go my way, then I'm going to go ahead and look to get out right around my stop loss. Now, if you're away from the screen, then you've got to just set this, whatever you want to do up there, 5 pips above your stop loss. Now, as far as our profit target on this trade, where would we put it? A couple of places to put it. Number one would be just market structure, and if you're like I said, a smart money concept guy, that liquidity sweep right there probably would be what you're shooting for. So that would be 29.1297, 29.19 is where you're going to be. And what did we sell? We sold 29.15. It's not quite 1-to-1. You're going to need to get 1-to-1. So what I would recommend is maybe doing something like this, which you can easily do. You just got to look for your other levels. See this down in here? Those zones right there, there's where the bidders were. So if you wanted to make a target potentially of a decent profit target, maybe something that pays you off a little bit, you could put it down in there and just pretty much bet that the price gets a little bit of late day extension. At this juncture, this isn't the time to be doing this because the market is in fact flat. You do have Trump out there announcing new tariffs as well. This is a high-risk trade. However, if you're going to take it, we've got all the conditions we need to take it, at least with just the crossover. Now, the RSI, if you want to look at that, sort of shows us exactly what the market's doing momentum-wise. That's absolutely nothing. We're right around the 50% level. So all those things are building blocks into what a strategy is. A strategy gives you an entry and exit point. Profit expectations are where 95% of the traders run into issues. You don't take enough profit or you take too much profit. That's why I'm a very simple person. 1-to-1. Now, I'm not saying that everybody in here has to trade 1-to-1s. You don't have to do that. You could trade 1-to-2s, 1-to-3s, 1-to-4s. Just understand that as you risk $10 to try to get a $50 move out of the market, your winning percentage is going to go way down. And if your winning percentage goes way down, more than likely you're going to show, even though your back-tested strategy, sort of going back to the question I received earlier about back-testing, Ralph, even though your back-tested strategy may be good, may show on paper a nice, beautiful profitability curve, the drawdowns are what typically kill traders that try to do the 1-to-5s and the 1-to-10s. You end up getting in the situation where you lose 10 trades in a row, 15 trades in a row. I don't like living like that. I like to win a lot. But that's just me. That may not be the best way to do this stuff. You got to decide how you want to trade and what your risk management looks like. So let me see. All right, way behind on the live chat. Team Marina, how many pips above the swing high? Yeah, just put it a few. I eyeball it 5. Depends on your leverage. If I'm trading WTI crude, I probably 2 or 3. But if I'm trading something like gold, which is got a ridiculous spread, I don't know how you guys trade the spot gold. This one's going to get wiped out right here. I don't know how you trade it because the spreads are so big. I would be looking to trade. If I was doing this live, we'd be looking at gold futures for sure. 5-minute chart gold futures, absolutely. If I was doing it on this type of thing, I know exactly what the high is. 29.48.7. I'd be right there probably at 51, 49.1, probably a 4-pip shade. What I don't want to do is I don't want to go by one tick and then watch the market reverse. I don't want that. And as far as gold futures go, if you're not really, privy to what they are, It's just very tight. It's sort of it's a thinner market. Don't get me wrong, but the spreads, there's no spreads to contend with. Whereas if you're working with spot gold, something like this, I mean, what does that even mean? The spreads are huge, and they're always moving. So that's something to think about there. But you're probably going to have to be trading spot gold if you're trading in an international venue. There's nothing wrong with it. Just be aware that spread is a little bit bigger. So, and as you can see right here, this trade, high risk. Trump's talking right now. That's probably what's happening if I had to guess. And then right here, you sort of got that crossover. Why was the frequent crossover there? Because our RSI shows us that we're just not anywhere that we need to be trading. So, but that is how the strategy works. All right, let me see. Yari, which settings are you using for the RSI 14? I'm using the static version of the RSI. I like to keep it nice and simple. If you want to get in and tweak your periodicity, go ahead. But I just am using the standard reading. All right, let's see. Let's see if we can find one more trade. One more trade, maybe a good one. This is going to blow up, and we're going to get drilled on that. I don't like losing either. That's sort of a little something, you guys. If you want to know a little something about me, I hate losing. Hate it. All right here, Great Britain pound USD. That would have been sort of your overbought situation. So you would have sold probably right at the bottom and got chopped out. Beauty of it is it's not a very big trade. You got stopped right there. So 17 pips, something like this. You went back into overbought territory here and had the ability to sell right in this zone, right in there. So that got you your money back essentially. Right now, though, you'll notice the RSI is right around its 50-yard line. That's why we're using the RSI as a filter. I want to know when it's overbought, when it's oversold, and when I should be trading. All right, let me see. We had a question on the Kiwi CAD. I'll go ahead and give you my own opinion on the Kiwi CAD. You can see right here, gold definitely. Man, they start talking tariffs, that thing can go anywhere. Let's see. Let's go right here. Kiwi CAD. Interesting market structure. The first thing I would do is be looking right down here towards that double bottom. Let's go ahead and pull a weekly. That's what you want to be focused on there. So if you are in fact trading this Kiwi CAD, the first thing that I would be looking at is that weekly double bottom down there. That would have been sort of your liquidity sweep. A lot of folks like to talk like that, liquidity sweep, order block, however you want to say it. I call them swing lows. So your swing low, that double bottom, you've got a 2-week low right around that 97. Let's see, 79.97. So right around 78. 78 is probably going to be let's see right there, 79. 80. So 80 is going to be not 78, but 80. 80 will be your key zone right there. So that'd be support. If you wanted to, try some Fibonacci's on it, you could. You can see we've already broken beneath 78%. Right in this zone. So I would be bearish right now. If you're holding shorts, you're probably right. I would be bearish right here. And then I would be looking towards that 80 flat level as being the next potential support zone. Interesting pair, though, definitely on the move. Let me see. Chuku, how about using this on the daily or the 4 hour? If I'm trading the 5813, the first rule of thumb that I would always recommend, this does not surprise me at all. 5-minute chart, dead price action. President of the United States is actually talking right now. You don't want to take that kind of risk. What we want to do is get in on true price action. So this dollar, this trade right here, we're going to watch this one for a couple of days. This dollar yen, not bad. Overbought territory there, which is right there, you'll see. Sort of corresponds with this zone here. Okay, so we're looking to sell, and then right there is our signal. I think you have a better chance of being successful with this type of a trade on the Forex. So I would be, personally, guys, I would be looking to make my decisions on a 4-hour chart if I was trading this 24 hours a day. And if I was interested in intraday trading, I would look between the London Open and the New York close, and I would probably be looking at a 30-minute chart. The only time I would probably go any lower than a 30-minute, we just did some examples here today, but if you want to go to like a 5-minute, you gotta pick a day where it's real active, or a 1 minute. If you want to go to a 1 minute chart, you can do it. Just you got to be looking for big market moving events, things like CPI, things like NFP. Today's PPI figures, I had a big write up for you. We're not even going to cover it because it just isn't that important right now. So that's essentially the 5813. So hope it helped a little bit. All right, everybody. That's a wrap. We're working around the clock here. Be sure to check out the YouTube video tomorrow if, in fact, you're interested in the 9 EMA. Improving your entries on the 9 EMA. I think it's a pretty good video and one that you may be able to glean a little something off of. Trading's hard. Trading's hard, and when we start talking about all these different strategies, it gets really hard because I can immediately see a million. I mean, just with that 5-8-13, how could we ever back test, when Trump's going to come out and talk about tariffs? How could we ever back test that? And that's one of my biggest challenges. That's why the back testing question is such a great one. I really recommend that if you were going to use one of these strategies, back test it, get all the trials, and then maybe try to go back and filter out when the key news events were. I think you'll find that a lot of your big winners and big losers are based around those key events because that's where the market volatility is. And you either want to trade market volatility or you want to avoid it. Most of us on this stream are retail traders. You don't have much money. And if you don't have a lot of money, you can't really hold positions. And inevitably what happens during a CPI or a PPI or a Fed meeting, or maybe even just Trump talking today, is the markets go crazy. They stop out all the retail shorts and then the longs, and then they pick their direction. I recommend staying out of that stuff unless you got deep pockets. I really do. All right, everybody, I'm going to go ahead and sign off. I've rambled long enough. If, in fact, you have any questions at all, be sure to reach out. I'm over at the How to Trade Trading Room. Go ahead and send me a private message. I'll do the best I can to answer your questions. Like I said, if I know, I'll do my best. If I don't, then I won't be able to. I might be able to point you to somebody who does know. As far as the rest of this, strategies are a big deal, and everybody seems to like them because everybody's looking for the Holy Grail, and that's great. My strategy came out of the one that I built for myself. Came out of just some basic lessons about Fibonacci retracements, and then just a dozen years watching price ebb and flow, and now I have a pretty good idea of what I want to get accomplished every single day I go in the market, and you will get there. You will get there. It may take you some time. 5-8-13. Maybe you start there. Maybe you hate it and do something else. Who knows? All right, everybody, that's enough for me today. You guys have a fantastic session. Be careful if you're in the market right now, though. I mean, Trump could literally say anything at any time, and it'll blow the markets up. Be very, very careful. Tomorrow we'll be back. Valentine's Day scalping. We're going to go ahead and scalp retail sales, and I'll talk a little bit of PPI then tomorrow as well. All right, that's a wrap. Have a great session. Trade the action well, and we'll talk soon. See ya.